What's going on, guys? How are you? This is Shocks and this is ShocksCapital FX. Today we're talking about a day trading strategy from ICT that works wonders. So what we're going to do here, we are going to need a lot of patience so that we can be waiting for the market. So we're going to start from the H4 time frame, then get our entries from the M15 time frame, and we are going to be using the Asia range to determine if the trade is valid or not, or if the order blocks are best or not, depending on what we are looking for on each and every day. So let's get into it. So remember, when we are talking about these things, first of all, we talk about what? We talk about market structure. And the market structure that we are looking for is not the market structure that you have been taught, the market structure that looks like this. This is what they have told you, right? So this is a generic, a theoretic market structure that doesn't work in the real markets, right? So I'm going to show you the market structure that you are going to be looking for on the H4 time frame. Then you are going to the M15 time frame and employ a very easy entry technique that I'm going to show you in this video. So stay up to the end so that you can see what we are talking about. So number one, this is a flawed representation of market structure. Why? Because the market structure can move like this anytime. So we have to get a schematic that is closer to the real market. So what I'm talking about here is something that looks like this. Remember, when the market is moving, it makes an aggressive move, then retraces with some consolidation, makes an aggressive move, retraces with some consolidation, sometimes reverses, makes another move. So this is the kind of market structure that you might likely find in the live markets, in the live forex charts. So what we are doing here is we are considering this as our swing highs. These are our swing highs, depending on what you are doing. And if you are an avid ICT follower or trader, you know that these we call liquidity traps. Why? Because they are double tops, double bottoms, liquidity traps. And we have what you call the trend line phantoms, which you can see in this schematic. So what we are doing here is very simple. We are looking for order blocks that are going to be retested after taking out liquidity number one, after taking out a high. So when you are talking about liquidity, you are talking about these highs and you are talking about these phantoms. So we have trend line phantoms, we have moving average phantoms, all that we are talking about that. So the market or the price has to go through those liquidity gaps or those liquidity traps to come to retest an order block. So in this case, we might be having an order block in this area while price has taken out all this liquidity, and if you look closely, we are also going to be considering order blocks that are retested after what I call a 3D schematic, something that looks like this, right? So what we are saying is we have 1, 2, 3 touches up to the order block, something that looks like this. So this is what we are looking for, and we are looking for our order blocks around this area. So if a market retraces back to the order block in this manner, this is what we are considering a high probability setup. So these two schematics that you see on your screens right now are what we are going to be looking for on our chart. So we are going right to the charts and try to see how we can best trade this on the H4 time frame. Then after that, we understand or we explain how we can trade that on the M15 time frame and get super tight entries. Right, from the schematics that I've shown you on the whiteboard that was here, you can clearly see that we have a channel here. We have this channel that you can see, right? This is the H4. So this is what you are marking before you do anything. You have a channel, so you have to mark the obvious first before you look for the complex matters or the complex parts of your chart, right? So what we are doing here is we are looking for order blocks. So why do we mark order blocks that we are not looking to trade, or that have already stood, or that were broken already? We are trying to build the momentum so that we understand the flow of the market. If you mark like what I'm doing here, you understand that price is coming from this angle and it's going from this angle. So there is some fluidity in that. So we have this low getting taken out here, then we have also this low taken out, we have this low taken out, right? So this is clearly a downtrend. And as you can see, we are looking at order blocks that are going or that are bearish. So we're looking for bearish order blocks, something that looks like what I'm showing you here. So these order blocks that we are marking, we are going back to the M15 time frame so that I can clearly show you what we are talking about. So these are the order blocks that we are talking about, and this is the liquidity that we were talking about, the 3D theory that I'm talking about, where price just makes a flag or a pennant retracing back to a valid order block. And you have to be picky. Don't choose every order block that you see. You have this order block, right? If you consider this retracement here, if you go to the H1, you see that this retracement that you see in this area is actually something that looks like what I've showed you in terms of consolidating and stuff. So this is the consolidation that you should see when you are analyzing your charts on the H4. So if it's not clear on the H4, go down to the H1 and really get the best from your analysis. So this is what you are seeing. This is the trade that we called out in our Telegram group, and if you want to see, you can just join that group in the description down below. And this is a very good order block. What we are looking for from this is some price action that consolidates back to the yellow zone. We want something that looks like this, but I want to show you something before we talk about price retesting this order block. You see, when price is going up like that, it will be respecting order blocks also in this area, to be respecting order blocks in this area as it goes, or as it nears this order block at the top here. So it doesn't go there in a straight line, or rather I would say, don't trade something that goes straight to the order block, like something like this. If you see an order block in this area and you see retest of an order block that looks like this, or that looks like the price section that we see on M15 of the same chart, this is what I'm talking about. You don't need to be buying this kind of market structure. Really, why are you buying this? So this is what we are trying to understand here. You have to have your order blocks, and you have to have your structure of getting the order blocks. And remember, we only take order blocks that are in the premium and discount zones in terms of choosing valid order blocks. And if you want to know what discount and premium mean, you can just search a video on premium and discount on this channel. You will be helped immensely. So let's go to the M15 and try to understand, or try to see how we could have entered, or how we could have got a trade in this order block that you see here. So this order block is very valid. Why? Because we have a very aggressive move down here, and we have we have a break of structure, and this is a move back to the order block, and it got 3D. You see, this is the 1, 2, 3 touches of the trend line as it retraces back to the order block. We go back to the M15. What do you see on the M15? On the M15, remember, we want to see a very recognizable pattern. And when we're talking about patterns, we are talking about various patterns, but I want to see M's and W's. So that's the easiest of patterns in the forex industry. So as I said, this is a very easy ICT strategy. So what we want to do here is to get the very easiest way of getting our trades in the market, right? So let's just go to GBP USD here. Let's start from the H4. Let me show you what I want to show you here. Right, these are order blocks that you should avoid. You see all these order blocks in this area, you should avoid these types of order blocks by all means. Why? Because these are all mitigated. There's no order block that you can base your analysis or base your trade on in this area. So what do? You look for proper order blocks that break structure, and this is one of them. And if you go to the M15 time frame, remember, we're looking for what? We're looking for recognizable M's and W. We are looking for those M and W patterns that your little sister or your little brother who is in kindergarten can clearly identify without any problem. So this is the M that we are talking about. We have first leg here. So this is the first leg of an M that is printed, and you don't do anything. You wait for this second leg. After the second leg, you wait for the confirmation candle, which is this big red candle, right? This is what you are seeing. So this is your this is your entry, your sell here, your stop loss goes above the what, above the pattern, right? So these patterns you can get even when you want to add trades, your winning trades. Look at this. This was an order block that was on the what, on the M15. You know already that this is a what, a bearish market structure from the H4. So what are you doing? You're marking this order block because it has taken out structure on the M15, and when it prints an M like that, you know what to do. You have the guns, you just shoot. And this is what we are doing, right? This is what we are doing, and this is how we are looking at our trades. And if you have some price action that looks like what you are seeing on a chart right now, don't be involved, right? So we have this is a very good order block that might hold. So you go to M15. Remember, you are looking for recognizable M's and W's. What are you looking for here? You are looking for a second leg, but considering the time now, we are in the New York zone, right? So I would prefer you wait for next day's London session, and you see what happens in there. So this is what we are doing, and you go to Euro USD, and you are seeing the same thing. You see these are kind of order blocks that you are looking for every day on the H4. This is your order block, and you just mark like that. So if you don't have a trade, just pull out a chart and be marking order blocks. By doing that, you are internalizing the idea of marking perfect order blocks. So when you want to trade, you are not struggling with finding the best order blocks that you can find on any given trading day. So this is what we are doing. Go to CFDJPY, a very good pair that gives out very beautiful order blocks. So you have to know the pairs that gives you gorgeous order blocks, right? So you need to know, you need to have a clear set of rules of what you are going to be doing at each and every time. See this order block, very good, and we have numerous kicks to the order block right there. So we're just accumulating orders before we collapse like that. So a lot of people blew their accounts around this yellow area, but unfortunately, let me say fortunately you didn't. I'm just hoping you didn't. So if you did, very sorry. Next time you will be better prepared for the war. So this is what you are doing. And if you look at this part, we have what you call a half a Batman or a head and shoulders. So we are looking for, remember, recognizable pattern in the yellow zone. So to wrap up this this lesson, let me just tell you the things that you are looking for. Number one, you are looking for direction of market structure, either be bearish market structure, bullish market structure. Number two, you are looking for order blocks on the H4 time frame. After you get your order blocks, what are you looking for? You are looking for recognizable patterns on the what? On the M15. But remember, the pattern has to be inside the order block. In this case, what you are seeing right now on the screen, the head and shoulders I'm talking about is inside the what? The order block, the yellow zone. This is what you are doing, guys. I hope this was helpful. I will see you in the next one. Trade what you see, and I've just shown you some things to see here. And hands to the head, salute.